What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want to be part of the fastest growing financial community on Patreon, get yourself down to the description box. Click on that first link, which is the Wealthbuilders Financial Community on Patreon link. Click it, man. Go to Patreon. Sign up for the Wealthbuilders and be a part of this financial family that we've put together. Over 2,000 people. Why? Because people are tired of being in the matrix by themselves with no help, nobody to bounce ideas off of, nobody to ask questions. Here's one thing I want you to understand. In the Wealth Builders, we're not experts. We're just a group of people who have decided to come together and help one another get to financial freedom. Ultimately, passive income. We share nuggets, best practices, tips, what's working, what's not working. More importantly, we provide a safe haven for people to be able to ask questions, man, of ordinary people from all different backgrounds, all different levels of investment experience, just sharing ideas with each other. If you want to be a part of that type of financial community, guys, no one's trying to sell you anything, but just here in a community where people are just trying to get to financial freedom every day, and we're helping each other do that. So first link down in the description box, click on that Wealth Builders Financial Community link. Take you over to Patreon, sign up, send me a DM when you get there, introduce yourself, and let's go to work. The good folks at Webull are offering a cash bonus for anybody that opens a new Webull brokerage account. You put a certain amount of money in that new Webull brokerage account, they will give you a cash bonus. Second link down in the description box, click on the link, and Webull will explain everything to you in the link, right? They'll tell you what you need to deposit into your new brokerage account in order to get cash back. They got 4 or 5 different levels. So check it out if that's something that you're interested in. Well, guys, today has been a roller coaster already, man. This morning, we got the ADP payrolls report. And man, we came in lighter than expected on adding new jobs to the economy. And the market started going down. Pre-market, boom, already started going down, right? And then all of a sudden, President Trump comes to the rescue. He says he has a trade deal with Vietnam, and that kind of turns things around a little bit. But here's the thing. Is that a sign that we are coming on some rough waters? I think it is. And I think the only group can save us is the Federal Reserve with reducing interest rates. What are you talking about, man? Well, I'm talking about the economy. See, what we're starting to see, guys, is a weakening in the labor market. And if that labor market continues to weaken, eventually the economy will start to weaken. You guys already know the Federal Reserve has already come out on record and said that they predict for 2025 GDP to be 1.4%. Go look at GDP from 2024. Go look at GDP from 2025. Both of them were north of 2.5% GDP for the year, each of those 2 years. I think 23 was 2.8, and I think 24 was 2.5. Federal Reserve is expecting 1.4%. That may get worse if the labor market weakens. If the labor market continues to weaken, what will the Federal Reserve do? They'll have to cut rates. They'll have to. They have no other choice. They'll have to cut rates. And if they don't cut rates, not only will the economy go into the crapper, stocks and crypto will go into the crapper with the economy. Why would you say that? Because the crypto and the stock market ain't tied to the economy. Well, okay. But let me run this by you. All three of those things have what in common? What do they have in common? Consumers. Yeah, economy, stocks, and crypto have that in common. Somebody got to buy them. Somebody got to buy something in the economy, goods and services. Somebody has to invest in stocks and crypto. And guess who does that? You and me, consumers. But if we ain't got no job, we ain't got no money, guess what's going to happen? We're going to stop buying goods and services in the economy. We're not going to invest anymore in crypto or stocks. See, the Federal Reserve at this point, they're facing a dilemma. They want to try and wait to see if President Trump's tariffs are going to increase inflation. But while they're waiting, guess what's happening to the economy? It's continuing to deteriorate. And before you know it, it's going to be deteriorated. And then they're going to try to rush in and lower rates. But at that point, we're in a recession. We're in a recession at that point. So that's why you got some people out here are real seriously saying the Fed need to cut rates in July to stop this. Worst case scenario, they cut rates in July, they cut rates in September, and then inflation starts going back up, but the labor market and the economy stabilizes. What can they do? Reduce rates again. See, I think they need to be more proactive. And I'm going to tell you, whether you like President Trump or not, that's irrelevant to me, right? Whether you like him or not. But you got to respect this whole thing of cut rates now. And here's the thing. It ain't just Trump saying that. You got three members of the FOMC, the Federal Reserve FOMC committee, saying they need to cut rates. Why won't Powell cut them? I don't know. I don't know. We need to cut rates right now. Because if we don't, we're going to go into a recession. The labor market is weakening. Here's the deal. Tomorrow, July 3rd, jobs report coming out for June. And if that jobs report comes out lighter than expected, guys, if it comes out under expectations, we're going to be in trouble. For us as investors, get ready. Because in my opinion, that report tomorrow is the beginning of the end. If that report comes in lighter than expected. So my recommendation to you as an investor in crypto, as an investor in stocks, paper assets, whatever you want to call it, you better pay attention tomorrow at 8:30 a.m. Eastern time. June jobs report is coming out. And if that thing comes in lighter than expected, guys, hold on tight. Strap into the roller coaster. We're getting ready to take a dipsy. It's going to take a sharp dip if that thing come in lighter than expected tomorrow. And again, guys, I'm not a financial advisor. This is not financial advice. This is strictly my opinion. None of it may happen. So don't listen to me. Go out and do your own research. I'm just telling you from what I see, it ain't looking good. It is not looking really good. So we can sit up here, we're going to wait to see what tariffs do. Well, tariffs ain't done nothing yet. Now, will it do something? Possibly. Don't get me wrong. I'm not a big proponent of these wide sweeping tariffs either. A lot of people aren't. Some people are, some people aren't. I'm on the side of, I'm not in favor of wide sweeping tariffs on the world. But as of right now, didn't see anything in April. Didn't see anything really in May. We'll see what June holds. We'll be getting the jobs report. Will it be next week? Maybe next week or the week after that. Not the jobs report. We'll be getting the CPI inflation report for June. If we don't get it next week, we'll get it the following week. So that'll tell us, jobs report tomorrow for June. The following week, you'll get the CPI inflation report for June. Those two guys are very, very big pieces of data to help you and help me come up with a game plan for the future, for the immediate future. Because here's what you got to figure out. Here's what you got to think about. Let's say the jobs report for June tomorrow comes out lighter than expected. What does that mean? That means experts are saying the economy should add this many jobs. Let's just hypothetical now. I don't know the numbers, but hypothetically, let's just say the experts say the economy in June should have added 125,000 jobs. That's what the experts are saying, right? But when the actual report comes out tomorrow, let's say the economy only added 100,000 jobs. Expectation was 125,000, but it actually did 100,000. That's below expectations. That's lighter than expected. That's not good, because what that's telling us is, if you've been watching this thing, this jobs report from January of this year all the way through June, you'll see we've been coming down. Coming down. At some point, you break even, and then all of a sudden you're in negative territory. So that's what we got to watch out for tomorrow. And then the following week, you're going to get the CPI inflation report for June. And guess what? If we come in higher than expected, now the Fed is stuck between a rock and a hard place. You got inflation going up, but you got the economy, AKA the labor market, weakening. Inflation strengthening, labor market weakening. What do? What does the Fed do? Which one do they save? So we got to watch these two reports. Clearly today, pre-market, and even when the market opened, the stock market didn't take that ADP payrolls report for June positively, because you could see the market was starting to pull back, sell off. And then all of a sudden, 47, President Trump came out with this tariff news. Said he had a deal. Here it is. S&P 500 rises after Trump announces Vietnam trade deal. Gains limited by weak jobs data. See what I'm saying? Even though Trump came out with good news on, some would say it's good news, some will say it's not good news, but it's a deal. I haven't read through all the details on the deal. Maybe it ain't a deal, because y'all know we've heard this before. We got a deal. And then all of a sudden, you got a framework. You don't have no deal. You know what I'm saying? So hopefully it's a deal. I haven't, went all the way in the foxhole and looked at the whole thing, but hopefully he's saying it's a deal. Let's say it's a deal. Still didn't help very much. Why? Because you got this ADP payrolls report that kind of says, we got bigger issues, guys. Yeah, trade deal is fine, but we got some bigger issues. The issues we have right now is our labor market continues to weaken. And when that happens, people stop buying stuff, guys. 70% of our economy, our GDP, our economy is based on people buying stuff, consumer spending. If people are in fear that they won't have a job next month, guess what they're going to stop doing? They're going to stop spending. And guess who that hurts? Companies. And guess what makes up the stock market? Companies. It's going to hurt crypto too. Why? Because crypto don't have no companies. Crypto is just worth whatever the next guy willing to pay for it. But guess what? If that next guy ain't got no money, he can't pay for it. So what does that do to crypto? Goes down. Why? Demand goes down. It's pretty simple. Supply and demand, guys. If there is demand for crypto and stocks, guess what happens to crypto and stocks? They go up. If the demand falls, guess what happens to crypto and stocks? They go down. Pretty simple. You ain't got to be Einstein or some genius to figure that out. Same in our economy. If people ain't buying goods and services, demand goes down, guess what happens to GDP? Goes down. Pretty simple, right? I'm no genius here, and this is not financial advice, but this is just common sense 101. If I got a dollar in my hand, and I believe tomorrow I won't get another dollar, guess what I'm gonna do with the dollar in my hand? I'm gonna stretch that dollar as far as I can stretch it. I'm not gonna do no extras. I'm not going to Disney World. I'm not gonna buy a new car. I'm not gonna take that trip. I'm not gonna go to the mall and get that extra pair of nice jeans. I'm not gonna do any of that if I think my dollar is in jeopardy and I can't get another dollar tomorrow. So here's the deal. Fed gotta make a decision. I think, and I gotta say this, guys, I gotta agree with old Trump on this one. They need to reduce rates in July, right now, immediately. They need to reduce rates immediately to stop all of this, because I'm telling you, they can keep on playing this wait and see crap. Only people gonna suffer is you and me. 1%ers ain't gonna suffer if the Fed increase or decrease rates. They're not gonna suffer. They're rich, they're wealthy, they're billionaires, they're multimillionaires. They're gonna still be able to take their trips. They're gonna still be able to go buy them new cars. They're gonna still be able to get on their jets and beautiful homes and all that stuff. They're gonna be able to do all of that because they're already wealthy. They control all the wealth in this country. You and me control 1% of the wealth. That's it. So any little ripple, any little financial hiccup, you and I suffer because we control none of the wealth. 1% of it. So any little financial hiccup, you and me are the ones that suffer. I cannot stress this enough, guys. And again, this is not a doomsday type deal, guys. Y'all know me if you rock with me and watch my channel. This is not doomsday. This is me telling you to prepare yourself. This is me telling you to prepare yourself, man. You better make sure you are ready for whatever may happen, because the Fed, for some reason, I don't know what the deal is, but for some reason, the Fed is really not wanting to reduce these rates when they really should be. And listen, I don't agree with a lot of things President Trump says. I do not. I don't agree with a lot of things that are going on in our administration. I don't agree with a lot of things that are going on here in America. But at the end of the day, I do believe rates should be reduced right now, immediately. And I'm not ashamed or afraid to say I agree with him on that. The Fed need to be reducing rates. See, we need to be proactive right now, not this reactive crap. We need to be proactive. You got a weakening labor market, and it's been weakening since January. It ain't just started this, it's been weakening. When you see your labor market weakening right like that, you already are saying you're predicting GDP to be 1.4%. The standard is 2%, guys. To have a healthy economy, you need to be at 2% or greater GDP. They've already written on record and said they expect us to have 1.4. Ding, 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 ding. That's the bell. Why they won't reduce rates when they already know that? Because what they're thinking of is transitory inflation. May or may not happen. I don't know. Who knows? We'll get a little bit of glimpse of it when we get the June CPI inflation report next week. We'll see. Now, if that report comes out and does not show a significant bump in inflation, then the Fed need to cut rates in July, period. Here's the thing. If the June jobs report that's coming out tomorrow, if that thing come in where we're at under 100,000 new jobs added, they need to cut rates immediately, not even in July. They need to cut rates now. They need to have an emergency meeting and cut rates right now, tomorrow. Don't even go into the 4th of July, which is Friday. Don't even cut rates. Emergency meeting, we're cutting rates right now when that report comes out tomorrow. Matter of fact, they probably already done got a little sneak peek at the report. See, they see this stuff before you and I see it. And here's the thing. A lot of your hedge funds, a lot of your institutional investors, a lot of these people, these billionaires, they probably know too. So they're behind the scenes right now, manipulating the market, making moves. You and I don't know it yet until tomorrow at 8:30. They probably already know. I'm just giving you my opinion now. That doesn't mean it's true. Let's not get it twisted. I'm not here to convince you of anything. I'm just giving you my opinion. And the last time I checked, in this great country we live in, although it's not perfect, I still have the right to give my opinion. I'm not attacking anybody. I'm just giving my opinion. What you need to do is figure out what you believe. See, I know what I believe and I'm prepared. I'm ready. I'm locked in. Had some seeds planted, parachuted out. Need liquidity right now. Can't be all in right now. I need liquidity. I'm going to be in a little bit, but I need some liquidity so I can take advantage of opportunities that will present themselves if this thing fall off the cliff tomorrow. Because it could fall off the cliff tomorrow. Just saying, guys, prepare yourself. Now, if the jobs report comes in better than expected, we added more jobs than the experts said we would add, boom, good to go. Go into your weekend, your 4th of July weekend, and have fun and do your thing. But boy, if that report come in tomorrow light and you ain't prepared, whoo, ain't gonna be pretty this 4th of July for some of y'all. If you're not prepared, when that thing come out tomorrow morning at 8:30 a.m. Eastern time, 4th of July ain't gonna be that fun. So get yourself prepared today and tomorrow. Get ready. Get ready, man. Like I said, I had some seeds planted. You know, had to get some liquidity. Had to put some liquidity back in the pocket. So that's my way of saying prepare. Also be ready for opportunities. Now, it ain't the end of the world. It ain't the end of the world. We know we're very resilient. Our economy is resilient. Our markets are resilient. But for a temporary time, who knows? Like I said, ADP report came out this morning, light. I think it came out 33,000 jobs, light. Here it is. Earlier Wednesday, stocks came under some pressure after the latest report by ADP showed that the private sector lost 33,000 jobs last month, and they're talking about June. That marks the first monthly decline in ADP's payroll report since March 2023. Economists polled by Dow Jones payrolls to grow by 100,000. So instead of growing by 100,000, lost 33,000. If that ain't a wake-up call for somebody, you better wake up. You better wake up. Here's an expert. Here's one of the experts they interviewed at CNBC for this article. This is what he said. We, frankly, have been seeing a weakening of the labor market for months and months now. I just told y'all that. The thing been weakening since January, man. So whatever the Fed talking about, I have no clue anymore. I don't know what these people talking about. I don't know what they're doing. They need to be reducing rates. I'm talking about immediately. ASAP Rocky. They're fooling around, playing these little games. I'm telling you. But see, this is keep telling y'all. See, these 1%ers, man, they slick. See, these 1%ers, they will get on TV. Oh, we love you. We care about you. We're this. We're trying to save the economy. We're this. How are you trying to save the economy when you done seen jobs sliding for 6 months and you still won't reduce rates? See, that's that old Jedi mind trick they try to play on us. That's that Jedi mind trick. Some of you Star Wars fans will know what I'm talking about. But that's that Jedi mind trick they try to play on you. Oh, we got your best interest at heart, but all along trying to rip your heart out. That's that Jedi mind trick. You got to be ready for it, guys. This expert went on to say, and I always wondered if it would take a negative payrolls print to get the Federal Reserve to pay a little bit more attention to the labor market as opposed to inflation picture. This is coming from an expert, right? Not Richard Fain, an expert interviewed by CNBC. Investment strategist at Bird, Ross Mayfield. Go look him up. He's supposed to be an expert. But I agree with everything he just said. Maybe this will get the Federal Reserve to pay attention to the labor market like they are to inflation. At the end of the day, inflation is bad, but the labor market weakening and people not having jobs and any money is worse. If I got a job and I'm making good wages and I got to pay a little bit more for my eggs, then I'm going to pay a little bit more for my eggs. But it's even worse if I don't got a job. I don't care what the price of the eggs are. I can't afford them. See what I'm saying? So the Fed can sit around here and try to play this patty cake game with President Trump. Oh, he said, go ahead and play those games with him. Again, Jedi mind trick, right? Because y'all know Powell a human being now. Come on now. He's a human being just like you and me a human being. Y'all know Trump been hard on him for months, calling him everything but a child of God. For months. That got to get to your psyche at some point. I don't care who you are. You're a human being. Somebody, I mean, you're talking about the president of the United States calling you out of your name for months, calling you everything under the sun. That got to mess with your psyche a little bit. I don't know about y'all, but I know it would mess with mine. Right? If my next door neighbor called me a bad name every time he see me, at some point that got to mess with me a little bit. I'm a human being. So all I'm saying is we got to put that aside and get these rates reduced or we going to be in trouble. Now, again, jobs report may come in tomorrow better than expected. Just because ADP came in light don't mean the regular jobs report will come in light. But still, for 6 months, like this expert just said, labor market's been weakening. And the only thing the Fed has been concentrated on is inflation. That's it. So we'll see. We'll see what happens. You better get yourself in position and get yourself ready to go. The report comes with the stock market near record highs despite concerns that lingering trade tensions between the U.S. and other countries could slow U.S. and global economic growth. To be sure, the ADP report has a lackluster record predicting the government's monthly jobs report, which is due out on Thursday. Economists expect growth of 110,000 jobs for June. So ding, 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 ding. That's the number you need to look out for tomorrow in the jobs report. That's coming out at 8:30 a.m. Eastern time. Yeah, for June. If the thing is higher than the 110 jobs added, we'll be fine. We live to fight another month. If that thing come in lower than that 110,000 jobs, guys, and I'm gonna even go on record to say if it comes in below 100,000, game over. Look what happens to the stock market and the crypto market tomorrow if that thing comes in less than 100,000. So all I'm telling you is if you're a seed planter, be prepared to plant some seeds. That's all I'm saying. It may be an opportunity for you. However, if the upcoming jobs data follows the ADP report in missing expectations, a Fed interest rate cut may be on the table when policymakers meet later this month. That's according to the CFRA research Sam Stovall. There already been growing expectations for the Fed lowering rates at its July meeting, as the CME Group's Fed Watch tool shows roughly a 25% chance of a cut, up from 20% a day before. If we end up having a fairly weak employment report, then that could allow the Fed to be cutting rates. This is coming from Sam Stovall, Chief Investment Strategist at CFRA Research. He also pointed out that Fed Chair Jerome Powell recently confirmed that the central bank would have cut rates by now if it weren't for President Donald Trump's tariff plans announced earlier this year. See that Jedi mind trick? See, that's that jab. right? You see how they jabbing at each other. Trump just come out and just say his in plain English. He call him everything, right? You know, too slow, Powell, too late, Powell, all kind of names. See, Powell took a little dig at Trump, but he did it on the, on the professional side. Had Trump not rolled out the tariffs, we would have cut rates. See what I'm saying, guys? This is at a whole nother level that these guys are at. They're at a whole different level. Both of them wealthy, both of them rich. They ain't gonna miss no meals. And they around here fooling around. Okay, here we go. If that were the case then, it could be the case now, especially if we have weaker than expected employment data. See, this is the thing. These folks know employment data has been weak for months. But they've been fixated on inflation, trying to get to that 2% mandate. That's not gonna happen. Powell only got 1 year left as Federal Reserve Chair. Trump already said he's gonna kick him out after that. Trump already said that. Trump already looking for a replacement. So he only got 1 more year in the position. I doubt he will get inflation down to 2% before his term is up. It won't happen. Because one thing I've told you guys, and you got to understand, this tariff stuff ain't going nowhere. Y'all gonna have these tariffs over your head for 4 years with Trump. I'm telling you, because that's Trump's big stick he carries around. See, this is how Trump will whip all of these countries and their leaders into place to bend in and kiss in the ring. See, that's how Trump makes these people bend the knee, is with these tariffs, see? So they ain't going nowhere. So we got to learn to live with these tariffs and figure out a way to build our wealth despite the tariffs, because they're not going anywhere. This is what Trump uses to make sure these other countries are in line and they bend the knee. That's it, guys. That's my opinion. No expert here, just giving you my little 2 cents. But I think that's how President Trump keeps these other countries in line. Look at the guy in Canada. What his name? Carney. Remember before he got elected, right? He had a lot of stuff to say. Oh, Canada's going to do this, and we're going to fight against this and fight against that, and Trump ain't this. And these people came out with some digital tax, which was done like a year ago. The deal was done like a year ago to have digital tax on American tech companies or app companies or whatever, something to do with that. I don't know the whole details on it, but they were going to levy a tax on somebody in the tech space. I don't know if it was for their apps or their phones or I don't know what, but it was a tax. Canada was going to, guess what Trump did? Trump called his bluff. Now this guy been talking all this noise about Canada strong and we're going to do this and we're going to do that. Soon as Trump went at him, guess what they did? Oh, we'll take it back. See what I'm trying to tell y'all? Trump ain't fooling around, because guess what Trump said? Stop all trade negotiations with him. See, this is how tariffs ain't going nowhere, guys, because this is Trump's weapon he uses to keep these people in line. Look at Canada. He just did it to Canada. They pulled back that whatever that tax was, the digital tax, they pulled it back when Trump said he was going to stop negotiating with him, because Canada know good and doggone well they need America. They need America more than America need them. That's just the truth, guys. I ain't got nothing against Canada. They're a great country. They got great people. And we've been great partners for decades. But let's be honest. Canada need America more than America need Canada. Period. So guess what? Trump uses those tariffs to put him back in line. And he got right on back in line. Same thing gonna happen to the EU. Same thing gonna happen to Japan. Now, the only one that I believe we got to watch and make sure we get this right is China. Because, see, China just don't care. They got 1 billion people over there. They've been around for 5,000 years. China don't care. But the rest of these countries, Trump going to use them tariffs to keep them in line. So all I'm saying, we're going to be with these tariffs. So don't think, oh, golly, the tariffs are going to go away. No, they're not. You with them for 4 years. Drop me some comments down in the comment box and let me know what you think, man. I appreciate y'all rocking with me. I got to get out of here, but just needed to give y'all that little update on the Fed and where we're at, man. Fed need to cut rates right now, immediately. Stop fooling around, Jerome Powell. Cut these rates, man. Stop playing this patty cake thing with President Trump and just cut the rates. Because people gonna suffer, man. We all messing around here. Cut these rates. Cut the rates immediately. Hopefully the labor or the jobs report tomorrow comes in better than expected. Hopefully I'm wrong. But I got a funny feeling the thing coming in light. I got a funny feeling it's gonna come in light. So be ready. Be ready. Because I'm definitely gonna be ready. If we get a dipsy, seed plan, period. Because if that report comes in really light, they got no other choice but to cut rates in July. Because Trump gonna go crazy. I'm just letting you know right now. Trump going crazy if they don't cut them rates in July, if this labor market come in light, this labor report. Trump gonna go crazy. I'm just telling you now, and he's gonna be at power. He's gonna be at power. We appreciate y'all, man. Like I said, get down to that first link in the description box, which is the Wealthbuilders Financial Community. Come over to the Patreon site, man. Fastest growing financial community on Patreon. Come join us. We'd love for you guys to be a part of our team. We got over 2,000 wealth builders over there. All we do in that community is try to help each other build wealth. None of us are experts. We don't try to tell people what to do. We provide a safe environment for you to ask questions and just try to get some feedback from people from all walks of life. All around the world, all walks of life are part of our community. And all we do in there is ask for people to be respectful, give opinions on traditional investing so others may learn and help. Ultimately, you got to be responsible for your own freedom. Not me, not the wealth builders, you. But it would be nice to get out of the matrix and have a support system. That's what we provide. Only a support system. So if you want to be a part of that, get down to that first link, click on that Wealth Builders Financial Community Patreon link, take you over to Patreon, sign up, send me a DM, let me know you're new, you're rocking with us, and then let's go to work. Webull, don't forget that Webull offer. They got it down in the second link in the description box. That's that cash back offer. Oh, I'm sorry, that cash bonus offer from Webull that they're providing for folks that are willing to open up a new Webull brokerage account. Put you some deposit in that brokerage account. They got some different levels of cash bonus they will give you back based on the deposit that you make. Just a way to get you excited about their brokerage app and try them out. So if you're interested in that, second link is the Webull link. Click on it, give you all the details, sign up, open you a new account, put you some money in there, and get you some cash bonus. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. You can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness, never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you guys on the next video.